All right, so this week, let us get straight into it. Let's have a look at what we have on the agenda. In terms of Forex, this is a very light week on data. So there's not too many, I guess, number or specific data type news coming out that will affect the market significantly, unlike in different weeks. The number one thing on this week's agenda and pretty much everything globally is everything is kind of all about Greece this week. Now, that June 30 deadline is, I believe, June 30 is next Tuesday, where pretty much they have to front up to the IMF, and I think that it's around about $1 billion that they have to make a payment on. Should they not be able to do so, well, Greece will basically be in default. Now, I'll discuss different scenarios of what could happen. The important thing to notice is that this is so significant that they've basically had to organize an emergency meeting, which is happening today. Well, when Europe wakes up, actually, and it's these here, Euro Summit meetings. They'll be running all today through the London timeframe, and the hope is that some kind of a resolution will be reached with Greece and their current situation, and so that we could basically move on. Should there not be a resolution today, the next available opportunity will be the 25th and the 26th of June, which is pretty much Thursday, Friday, and that's really the last scheduled opportunity to come up to some kind of an agreement. Should that fail, I'm sure there's probably going to be an emergency meeting over the weekend or maybe Monday or something like that. We don't know as yet. The bottom line is this. The euro in reality, it's better off without Greece. Okay, Greece is a big burden on it, and the reality is that over a long period of time, it's better off. However, should Greece default, I'm sure that almost instantly, or not in a very, very short, quick period of time, we should see the euro fall off by about as far as 5% of value. So we think about 5% of value when it's sitting at 113, that could be like 600 pips very, very quickly. Okay, so the reality is in the short term, if Greece doesn't make it, falls out, what instantly happens is some of the other nations become under the spotlight. Some of the ones that have struggled in the past, or like the Portugals or the Spains or the Italies, and then all of a sudden it puts the whole euro concept under enormous amounts of pressure. So that's why it's important for the euro that Greece stays in, okay, that it stays inside. The other good bit of news is that the reality is that Greece wants to stay in as well. So it's not like they're saying, no, 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 we want to get out. They do want to stay in, and they're trying really, really hard to meet the requirements that have been imposed on them. Okay, so you get the feeling that it's all going to be happy and they're going to make it, and it's going to be a bit shaky, but they're going to make it. That's the general feeling now. The reason why we could see a 5% drop off is because so many people are thinking what I've just said. Should it not happen and they actually do get kicked out, it will be an instant knee-jerk reaction. All right, so you should be aware of that if you trade in the euro. We are coming up to the deadline. The deadline is next Tuesday, not tomorrow, but Tuesday following, June 30. So pretty much what you may start to see in the markets as every day that we get closer to that deadline and there is no resolution, you could see people start to wind out of positions in the euro, and you could see it slide and slide and slide until something is announced of a resolution or whatever the nature that may be. Okay, so please keep that in the back of your mind. If you are trading the euro, it's going to be a week that you kind of got to have your finger on the pulse. And if you're in a position in one direction and the news comes out against you, it's the time that you just got to let go, just release the position and just get out. Okay, now if you're in a position and it comes out in your favor, that's the time that you got to suck it in and hold on and enjoy the ride. All right, so I guess this week the euro is under the spotlight significantly. There is Euro PMI data coming out from the French and the German as well. On the US front, there's not much other than the GDP quarter numbers Wednesday. And the other one that might be a little bit of some significance is the Kiwi, the trade balance number, especially after last week that they cut their interest rates and things of that nature. So just keep an eye out on those. I guess the one that's on everybody's eyes this week is going to be the Euro USD. All right. So please handle with care, as they say, if you're trading Euro USD. All right, let us move on. Like I said, it was a light week on data front, so let me move on and let's get stuck straight into it and analyze some charts and let's see what's happened and what may be happening this week in terms of possible trades. All right, first of all, this is our Aussie dollar triangle that we were monitoring. Let me zoom in on it a little bit closer. We got triggered. We got triggered in the downward direction, all right, and our trigger point would have been right there, okay. The trade started to go in our direction in that way, and then it just turned around significantly. Now this big candle, this is FOMC last week. It caused a turnaround and it could have made our trade really, really good, but in turns it turned around and actually we stopped out. All right, now if you've entered the trade at this point here, your stop would have been there somewhere. Now if I measure this out, just to emphasize for everybody, the trade got up to about 72 pips. The stop was about 50. All right, can everybody see that we reached the 1-to-1 point? So if you're trading this correctly, maybe you've made zero money out of it, but you should not have made a loss out of this trade. All right, now this week coming, so this Thursday, I'm going to be concentrating on how to place your stop losses, risk reward, all ratios, risk management, everything about trading. Once you're in the trade, how to get in and how to get out. Okay, so it's applicable to every single strategy that I ever show, but I believe it's a very, very important class because this kind of trade, we should not end up with a losing trade if you've triggered correctly. All right, does everybody understand that at some point over here we can see that the trade went further or at least equal the distance of our stop? Does everybody understand that? Yes? Great, fantastic. So with trading, especially if you're actively trading, we need to protect our capital. All right, so we'll talk all about that on Thursday, and I'll show you different examples and styles of trading until you find the style that suits your personality and your psychology. All right, so that was last week. Now, looking at that chart now, it's gone the other way. Does that mean we can trade it the other way? What do we think? Should I be able to trade it now in this direction? Okay, I've got one no. Anybody else? Okay, two no's. I've got one yes. Only if we have a setup. Don't know. All right, great. It's good. The answer is it was a valid triangle up to here to trade the breakdown. And it was a perfect setup because we came from up, we bang, and we were supposed to go down there. That didn't happen. We got stopped out. As soon as we get stopped out, we now no longer have a triangle. So in theory, I've got to delete all these lines out. I just left them on here just to show you. So when I take all these lines out, then you go, well, what have I got now? I don't really have anything. So I don't have a reason to take that buy signal. Okay, so now let's have a look at what we've got right now. I was looking at this before. There's possibly one trade that I like. It's a tricky one, but I'll show it to you. All right. Now, the first thing that I want to highlight for you is this. I'm noticing there's a little bit of congestion in there. All right. Now, what I mean by congestion, I'm noticing this kind of thing. So I would like to trade it down, and if it actually does go down, we break a big floor, okay, or I would like to trade it up. So that's how I would trade a breakout. All right, so that's the first thing that I've noticed. The other thing that I've noticed, if I zoom in a bit more, and I just need to change my profile for one moment. Give me 1 second. Okay, have a look at this profile. I'm on a daily chart, and remember when I showed you 3 weeks ago, price action trading in a trend? Okay, now it's kind of the trend is down there. Now it's starting to pull back, but we said that we had defined a trend by when these two moving averages crossed. Now they crossed over here and they still have not crossed back. So in theory, this could still be a pullback ready to continue down. So the only thing that I'm not liking about this trade is it's taking a long time, and this period has been quite long. Because I nearly got a setup there, but I didn't. I was looking for one there, and kind of didn't really happen. But I've got a setup right here. Oops, I've got a setup right here. Can everybody see it? Can we see the setup, guys? What I'm looking at? So what I'm looking at is I've got an inside candle, which would basically mean if I was a little bit on the aggressive side, it is a valid setup. I would place a pending stop sell where I've just drawn that line. This direction, my stop is going to be, say, 5 or 7 pips above that level there, and I'm going to try and trade it in a downward direction. Now, should this candle continue to go up and break that, well then just come back and cancel it all out, and there's no trade. All right, so it's on a daily chart. I have an inside candle. My moving averages have not crossed over as yet. The signal is still valid for me. We're coming from an upward direction, pulling back, and this is what I'm looking to trade. All right. Now, the good thing about this trade is if this comes off and breaks through there, it's going to go a long way. All right. So that's what I'm seeing there. Now, someone's asking me about the fib levels. Let me have a quick look. Fib levels is at the 38.2, okay, at that 38.2 level, which is okay. Now it went over here as well at the 38.2. That's the only thing that distracts me from this trade a little bit. All right. The other on the plus side, something else that I like about it is I mentioned straight away that I think I'm in a bit of congestion. So should that be true, and then we break down here, we could be heading at least to the other side. And I can see that I've got enough room to get to my 1-to-1 point. All right. So in fact, I've probably got enough room to get to about 1.3, 1.4. And if I hang tight, it might break through and I can get through to my 2-to-1. All right. Another question is support anywhere to be seen? Okay. Is there any support? Well, the support is all the way down here. All right. This is the big floor all the way down here. This is where the support is to be seen. So right now, if we look at, sorry guys, I just had a technical glitch there. Can you hear me? Yep, thank you. All right, so let me get back to where I was. I just got confused there. Okay, so the floor is down the bottom. The floor is down the bottom. Now, if I zoom in, zoom out, I can see that there is a bit of memory right there on the chart as well. So if that is holding, this could pull down. All right, so there are legitimate reasons to take this trade down. It is a little bit more aggressive. That's all I'm trying to say. All right. Otherwise, you're kind of in no man's land, and you've got to wait for the next wave of whatever's going to set up. Okay. So I can see that the support is down the bottom, and there is that noise up there as well. Okay. So all good. Okay. All right. So let me just recap that very, very quickly. We got the setup right there for anybody that wants it. Your entry is going to be at around about 77.33. Okay. Okay. Let's move on. Euro USD. All right. In last Thursday's class, we left on a setup trade. Now there's a lot going on in this chart, but essentially what it was this shape here. We were coming right there. We were right here. We were right there, and we were looking to see if we could get a trade down. Now, this is a classic example of how price action has protected us from getting into this trade. Now, it broke up, but it wasn't the break. Now, first of all, we said this is not the trade that we were looking for, because this pattern, this is the trade that we were looking for. Okay, so that's the first thing. But just in case you wanted to trade that anyway, all right, this candle was not a typical bull breaking candle. So it was not a reason to go up. And if you look for a short, see, because we were trying to trade right there, we had a setup right there, okay, but we broke on the up, everything cancelled, so basically we had no trade. So the bottom line is there was no result. No damage done, no profit made, nothing happened. All right, so that's the first thing. Second thing, if I go to my daily chart, I can still see that I'm trading inside of this channel. All right, now remember the Euro USD this week is going to be very, very strong, moving in one direction depending on the outcome. All right, so I get the feeling that if the outcome is good, it's going to be gentle, but if the outcome is bad, it's going to be harsh. All right, so that's the way that it's just that I think it's going to happen. All right, so we've still got this channel. We're right in the middle, so there's nothing really there. But on a 4-hour chart, if I let me get rid of this now, because oh no, I'll keep that one. I don't need that one, but let me get rid of this one. And let me redraw it. I've got a nice wedge happening here. I really like rising wedges. All right, so still I'm in the middle. So I kind of can't really do anything on the trade, okay? But I have to wait. So I'll be interested to see what happens there, and I'm very interested to see what happens here. The only thing with this particular pair this week, I think it's going to be fundamentally driven. So I'm kind of going to say Euro USD, if you're going to trade this, you should already be in it or take a position. I think the technicals, in moments of euphoria, technicals can fail. All right, so this is going to be one of those occasions. I get the feeling. All right, so handle with care. If you're not in the trade, just leave the Euro USD alone. If you want to have a bit of a go at it and you can find a good reason to take it, well then it could be very, very rewarding. Okay, everybody clear on our Euro USD strategy for the week? Fantastic. All right, let's have a look at the GBP USD. Okay, last week I drew this line thinking that I didn't know where it was going to turn. It hasn't turned, so let me now readjust that line. Actually, we can see something else here. We're on the GBP USD at the moment. just notice that there's a bit of a channel happening. Okay, so we've got here two, so we've got 1 and 2 touches down there. We've got 1 and 2 touches there. The pattern is really, really good. Now, what I like about the GBP USD is it's had this massive run. Okay, in fact, it's had like 10 strong days in a row. That has not happened for like since 2012. That doesn't mean it's going to pull back. All right, so it doesn't mean it's going to pull back, but it does mean that I'm heightened to alert that there might be a trade on. Now, there was a trade setting up, but it looks like it's just been spoiled. I had an inside candle here setting up right there with a pending order to sell, but we've just taken out the top. Okay, so don't be disappointed on that. So there's no trade right now. However, we're coming up to the 160 level. 160 is a huge region. Give me a sec. Let me just mark it out for us. Let me just mark it out. Okay, some of you might have had your screen stuck. It should be back to normal. Okay, all right, so there's the 160 level right there. Okay, and keep an eye out on some price action trading as we approach that. All right, I'm willing to take a trade. I get the feeling this one's just broken. We may get something like a candle like that, and I might get another inside candle very, very close to there and hit it again. All right. Now this is a trade. This is one that I really, really, really do like, and I'm going to try really hard to find the trade at around about that 160 level. I think it's going to get there. All right, or it's going to get us close to there, or it's going to test it. We've just taken out that little low there, so I don't have a trade on it right now, but I'm very, very keen to see if I can get a setup in this region. All right, let me see if I can see anything else on it. If I go over to a 4-hour chart, nothing. Let me just check. What's the fib levels up there like? Look at that. My fib level up there as well is 159.86. So I also get a fib level at very, very close to the 160. It's just made, it hasn't made a run like this for nearly 3 years. It's getting to a big, big fib level with a big round number. I'm just really looking for a good trade up there. All right. So it's the kind of trade that even if I get it wrong, it's not going to cost me much. My stop doesn't have to be extensively big. So it's a trade that it's a no-brainer. If we break it down to probabilities, I'm not just going to put a pending order right now though. All right. So I need to see a setup happen in there somewhere. Somewhere there, I'm happy to look for that trade. All right, we're all clear? Okay, let's carry on. Let's have a look at gold. Okay, gold has been nasty to us. Meaning, we technically had a trade there. All right, so if anybody took that, you would have been stopped out. Your stop would have been at least there somewhere. All right, so that was the last high. That would have been just outside, so at least that level there. So we would have been stopped out. All right. Now, then it's gone right over to the other side and it's just broken through. Again, we've already explained we triggered down, so this is not a trade, so you wouldn't have taken that trade, so we just stay away from it. So let me just modify and get rid of some of these lines on my chart. What that's left me with is, what do we call that, guys? What pattern have I got right there? Great. We've got a nice flag pattern. All right. So the way that I would trade this flag pattern, let's zoom in on it. Well, first of all, there's only one direction. All right. That's the direction that you trade a flag pattern. And because I've got this little high right there, what I would like to see, if I can break it, if I get a candle that just closes like that, I would take it on the other side. But sometimes with flag patterns, what might happen, that candle may just be like this, and you miss out on all this distance. All right. So what I would be willing to do is I would be willing to place my entry there and place my stop below the last low that was left, which would be there. So that would be my risk on the trade. And my target on the trade would be this distance here. So I would measure that up into that direction. All right. And that you can visually see that that's going to be easily 2 to 1. All right. So that's the way that I would trade that flag pattern. So that one's on the cards. The only thing is we are getting very close to this. If we come out and slip out, that's it. Forget about it. The trade is off. All right, and it's not really a flag pattern, so no damage done. The trade is off. But that's what you should be looking for. That's the only thing that I can see on gold. That is on a 4-hour chart. All right, let me move on. Let's have a look at the US yen. All right, the US, after all that pro US data and this and the interest rates is back on the table and all those things, has just come off the boil lately. All right, I think the FOMC meeting from last week or the week before, sorry, really dampened the spirits, but it hasn't it's dampened the short-term money. All right, it's still a longer-term kind of trade. So for anybody who's pro US dollar, this could be an opportunity to get in if we get further pullbacks. Now, right now where we're sitting, that pattern, what I'm looking at right there, I look fundamentally I want to go long, but this pattern just says that it's going to break down. All right, so it's just screaming at it, but what you can do, all right, if we step into a 4-hour chart, we can see that we can see that we got this little hot spot here. It's a kind of trade that has a little bit of risk, only a little bit of risk, and you could get something out of it. And what I'm talking about is you could try to bounce off this level here. You do have a setup. We had an inside candle set up right there. All right, and that level was broken, so we have a trigger. The current level that we are at puts you there. However, if you want to wait just a little bit, this is a tricky one. How I might play this, because it's got so much short bias, if we break this down, that's it. Obviously, I'm not going to be interested in buying, but I don't want to jump in at market either. So what I might try and do is try get in just there and see if I can sneak it in. All right. So this is, in theory, if I was trading a double bottom, I'm in the trade already. I would have been in at that level there. So if you jump in now, you're actually jumping in slightly, a little bit better price. Okay. So that's what I'm saying. Someone's saying a wedge pattern. I can't really see it. Give me 1 second. You know, if anything, maybe there's like a triangle down here. Is that what you mean, Alex? Yep. Okay. So if this, it looks okay. Yes, I think the pattern is okay. So that would mean that we would want to go one more time, come, and then the break is like that. All right. So what I'm trying to say is if this level holds, you've got a little trade in here right now. All right, which would be at current level. You could enter at current level. Your stop would only have to be, let's just put it about 45 pips. Will put you down here somewhere. all right, at about 122.28, let's say. Entries 122.70, which is where we are right now, and your target could be, there's enough room there, so 48, is it, you can go for about 1.8, about there somewhere would be your target. Okay, and remembering if you get to 1-to-1, take some action. All right, so that's on a 4-hour chart. I've seen this pattern on a daily chart. The way that that looks, I've seen this pattern so many times and it usually always breaks through. This is the only thing that's deterred me from this trade. All right. It's like I've got a built-in memory to this pattern. Every time I see it break through down. That's the one thing that is turning me off, trying to bounce it. All right. So play it as you feel comfortable. Okay. It's a small risk to find out if it's going to work out for you. Other than that, I don't really have anything else on the US yen. Should this break down, I believe we're going to get a really nice entry somewhere in this vicinity here next week. All right, which I would be very, very happy about. All right, let's carry on. Euro yen. Last week I spotted an inside candle in a trend. Do everybody remember? It was this one right here. And we said, we're not really at the bottom, but if anybody wants to trade it, it does satisfy being in a trend, pulling down, being in a trend, pulling down, and continuation. Does everybody remember that? That was from last week. If you traded it, your entry would have been there. Did anybody trade it? Okay, yes, everybody remembers. I can see you typing in. Did anybody trade this one, Euro Yen? If you did, let's analyze it. Let me zoom in just a little bit more so I can see the trade a little bit better. Your entry would have been about there. So your risk was approximately, say, 100 and say 40. The trade got as high as 123. All right, so it didn't quite hit 1-to-1, but you would still be in this trade and it's up about 50. All right, if you did not take it, it's too late to come in on this trade now, but I'm just pointing the trade out. All right, now on the channel is still valid. I still like the channel, and I think the next opportunity we may get may be here somewhere. All right, so if we turn into here and then maybe do a bit of that. So right now it's right in the middle. I don't really want to do anything. Let me have a look at a 4-hour chart. 1 second. No, there's nothing screaming at me to trade that. So on the Euro Yen, we're going to have to sit and wait. All right, and from the looks of it, nobody's in this trade anyway, so that means we'll just wait. We'll just see if we get an opportunity there. That's the next opportunity. Now, this opportunity could be either that or it could be that. All right, so keep an eye out on both possibilities. Someone's saying that they read somewhere if the Euro USD goes down, the Euro Yen will go up. No, it's not quite correct. If anything, these two pairs correlate quite a lot. All right. They're not 100% correlating, but look, you can see if you just compare these two charts, these are two daily charts now. This is the Euro USD. You can see the pattern, okay? And then if I jump across to my Euro Yen pattern, can you see a similarity? Okay, so they're quite correlating. Now, the Greece issue, if the euro itself, I'll cover this on Thursday, but basically, let's say you've got the Euro USD, and then you've got the Euro JPY. If you're long this one and you're long this one, effectively you are a euro buyer. All right. So the vulnerabilities or the differences between both of them comes down to the relationship between the US yen. All right. And depending what sizes you buy, it's the US yen movement that will make the differences for you. Now, what I'm talking about right now is pretty complicated. It's all about correlation trading. I actually have never covered correlation trading with you guys. It's pretty out there. So at the moment, I don't want to introduce it, other than tell you that these two pairs are pretty highly correlated. So they'll generally move about 70% in the same direction. Okay. All right. So let me move on. Let's have a look at the Kiwi dollar. Okay. Here's a trade that I kind of like. Now, this channel that we're looking at, even though it's very, very steep, it has been supported. Now, I'm going to get rid of the channel now, all right, because I feel it's too steep and I don't want to use it anymore. So let me just delete it. But what I do like right now, let me get rid of it. And let me just zoom in one more. I took a Fibonacci from A to B there that I'm labeling for you, extending it out to C. And look, it's falling right on the 161 level. It's falling on the 69 level as well. Now, the 70 level is stronger, but the 70 level was just blasted right through, which was about there. It just went bang right through. And more importantly, have a look at the candle patterns that I've got here. Have a look at these candle patterns here. Oops, let me draw it again. Have a look at those candle patterns. What have I got there? I've got inside candles. That's correct. All right. So I've got two. I've got three inside candles. I'm sitting on a 161 Fibonacci extension. I'm happy to go ahead and put my pending order right there and place my stop, say there somewhere. Okay, 2 to 1. It's a bread and butter trade. Romy, yeah, for the ones that can't quite read this, if it's a little bit hard, I apologize. If I use any other color, it just really makes my charts look too messy, and this is not what I really want to highlight to you. I'm just drawing it just to show you where that level lies right there. That's what I'm trying to show you. So let me get rid of it. There you go. So all I was really just trying to say to you is that this level is the 161 Fibonacci extension of A to B. Okay? Meaning this is the kind of trade that we should be looking for, and I've got a price action set up right there as well. So I'm happy to, I'm just going to draw a quick line there. That's what I'm doing. Does anybody want the levels? Okay, what have I got? I've got a high of 69.38, so let's make it 38. Let's make it 69.43. Someone write it down. 69.43 buy, and my stop will be Let's make it 68.70, I think. 68.70. So 69.43, 68.70. How much is that? It's about nearly 80 pips or something like that. 73 pips, I think it is. All right. So, and of course, your target 1 to 1, first action point 2 to 1 looks good here. All right. So just because it's 80 pips doesn't mean you've got to risk the house on it. We will discuss this on Thursday. You choose your dollar risk as you want it, but that's where the stop's got to go. All right. Euro, Aussie. Oh, any questions on that? Everybody understands what we've just done? Yep. Fantastic. Okay. Let's have a look at the Euro Aussie. Euro Aussie trading inside a daily channel. Okay, so where are we? We are right there, kind of in the middle of the channel. So I can't really do any channel work, not yet. I either have to wait till I get to this area for that, or I've got to wait for the top of the channel to try and trade back down. Let me see if I can see anything else. Give me 1 second. Okay, I didn't see this before, but I kind of like that wedge. Does anybody else like it? Sometimes when you're inside a channel of a bigger time frame like the daily, if you drop down one time zone, you can find geometric shapes inside the channel. And as long as you've got enough room to move to the edges, it's actually a quite effective strategy because it will dictate whether you take the trade or not if you've got enough room to be able to collect your full profit. All right, so this one looks okay to me. Um, so I'm just trying to see what I would prefer to happen. I would actually prefer to come here, get a clean break like that, and then trade it up as such. All right. I will trade it down as well if I get a clean break. Trade it down as well. Now remember, as I covered last Thursday, with geometric patterns like a converging triangle, the risk reward is different to like inside candles in hotspots. All right, so remember we said with these kind of patterns, sometimes the risk reward is not the same. So just go back and review that so that what a lot of people do is they get their targets all wrong and then it changes the end result of a trade. All right, so I can see that on an on a 4-hour chart. What's it look like on a daily? Yeah, no, that's fine. So we're in the middle of that daily channel and we've got this pattern happening there. I'll leave it there. Now for the who didn't realize how I drew that, notice that I've got very lightly superimposed on my chart. I've got my zigzag indicator. Okay, and all I'm trying to do, I've got it very light because I don't want it to dominate my profile, but I'm looking for the edges of that indicator and I'm trying to see if I can find lines that run through them, okay, as you can see over here. All right, that just about covers us. It's a lighter week, there's not as many patterns showing. Let me go back and review everything and summarize. If you have your question, type it in right now. If you want me to look at something, type it in right now and I shall do so. So Aussie dollar, start off. We have inside candles happening right now off a daily chart if you're going to attempt the trend down trade. Okay, your entry will be around about 77.30 in that vicinity. It's a sell, and it's a little bit on the aggressive side, but it's a legitimate setup. Euro USD, we have a rising wedge on a 4-hour time frame inside of a channel. The only downside with the Euro USD this week is that it's the hot one. It's all about a resolution. If they come up with a resolution tonight, which in theory that's what they're meeting about, that would be great, because then it could be a really good trading week. It would set up the whole week. All right. Now, having said that, if they come up with a resolution tonight, that will be generally pro euro. Okay, no resolution, or every day that we get closer to June 30 with no resolution increases the probability of the sell coming into play. All right, GBP USD, this is a really good setup. The 160s come in, it's on a fib level, it's very close to the channel. Look out for it. This should be a really good trade. Okay, gold flag pattern, as long as it holds, we've got a flag pattern to go up. US yen, it's the dreaded down break pattern, but if you are aggressive on a 4-hour chart, you can try and bounce it. We've discussed the entry levels. That's what it looks like. Euro yen. Euro yen. What do I say about the euro yen? Got nothing on the euro yen. Euro yen, no man's land. Let's leave it alone. Kiwi dollar. Okay, we got an entry on that one as soon as we trigger that candle right there where I got the crosshairs. That's a really nice one on a 161. That trade is a nice probability trade. Euro Aussie, let's wait to see what happens with that triangle. Any final questions, guys? Does anybody have any positions open at the moment on the Euro USD? No? No one? Okay. If it, on pattern trading, someone's asking a question on pattern trading, just review last week's class. We did pattern trading then. Alan's got a counter trend sell on it. Okay, cool. All right, well, Euro's going to be the hot one for us this week. All right, so just be careful with it. Well, the only thing I suggest is just stay with your finger on the pulse. All right, so that as soon as anything is released, you can react to it as quickly as you possibly can. That's all. All right, it's all we can do. That's what trading's all about. All right. Okay, guys. On Thursday, it will we will cover. I'm going to do risk management, how to play stops, targets, all the the yucky part of trading that sometimes we don't care about, but is so important. We don't give enough attention, and we end up with a losing trade when we should have a winning trade, or vice versa. All right, so we'll do that. We'll cover that this week. Other than that, if you have any questions, just email us. Email me as usual. Have a great week, and I'll see you all on Thursday at 3:30. Bye for now.